How's it going? I'm Ryan, and today I'm going to go over the two trades that I took on MNQ. My first trade was a loser. Second trade was a win that brought me back. Had a really small red day overall, so we'll take it. Could have traded a little bit better. There were some things I was watching. It didn't happen during the time frame that I was trading, but I want to go over those as well. Before we dive into the trades, real quick, we're just going to go over the hourly charts on ES and NQ, and we'll talk about what I was looking at, why I took the trades that I took, what I could do better, etc. But without further ado, we're looking at ES here. ES, if you've seen any of my previous videos, no surprise here. Since the end of kind of last week, we've been trading in this range, right? The zones I'm watching are still the same. We mark the highs and lows from the previous trading day. Nothing really here has changed, but what I hope that's pretty evident when you look at this is that we are not in a trending market right now. At least ES is not trending. NQ is the same. NQ broke out and set new highs if we take a look at that, so it is broken out of that range. But when you look at both of these, what you should see is this move up, right? We have an uptrend into horizontal price action, right? We've been ranging. We have this top of the range, we have this bottom of the range. And when we're in this ranging market, generally what I'm looking to do is only take trades towards the top and bottom. When we're down where we bounced before, I want to see signs on a lower time frame that we might bounce to enter and go long. When we're up near the top of this range, I want to see signs on a lower time frame that we're weakening, we're slowing down, and then I'll take a short position. So that's what we were watching here on ES. And on NQ, very much the same, right? We have this big move up, we move horizontally for a few days, rejections up in this area, bounces down in this area. So that in mind, to start the day, we did have a really nice long opportunity to catch the absolute bottom, but I didn't want to take it, right? And the reason why I didn't want to take it is, and I can actually go back to the previous day. So here we're looking at the 5,000 tick chart. And generally what I would want to see is something like this, right? We have this downward momentum, and then we start to curl. We're forming a low, higher low. That rapid downward momentum is really slowed down. We're starting to curl around, and then we get that move up. This is perfect price action to take a long in this area where we've kind of shown that we're at the bottom of the range. That's a very pretty low risk trade to take. I didn't take it here because it happened pretty fast, right? We had a really aggressive sell-off into this area, kind of pushed up, rejected back down, busted through, and then just made a straight vertical run. There's, I mean, aside from this red candle, but from 8 to almost 9, 8:53, near an hour with not a single red candle. So that was a really quick move. Didn't really give me a lot of price action confirmation that we were going to bounce as something like this would, where we get that slowdown, we get a hammer, we get some lower wicks, and then we get that move up. Here it was a fast move down, fast move up. So didn't catch the bounce at the bottom of the range, but that was an excellent move if you did catch it, especially this break and retest of yesterday's low on ES. So just wanted to say that. But the two trades I took on NQ, so we'll take a look at that a little bit more. The very first trade that I took was a short position on this candle here. Now I will say that this isn't my best trade, because when we're in a ranging market, and I'm going to zoom out so we can see the hourly alongside this, we can see the crosshair kind of on both, so it'll give you an idea what we're looking at here. Ideally, I'm taking trades only at the top and the bottom of the range, right? If we're in a ranging market, I kind of want to avoid this middle price action. This middle price action, as you see in here, can be kind of messy, kind of hard to predict. The best risk to reward is to look at the bottom and the tops of the ranges, assume that we're going to maintain that range, right? That we're going to continue to bounce off the bottoms, reject off the top, and wait for price action to confirm that you have weakness or strength at either of those areas, and then play accordingly. So with that being said, this trade was right in the middle of the range, which I will admit right now is not the best place to take a trade. It wasn't my best trade that I've taken, and realistically, in my head, I was acknowledging that this was probably a little riskier, and I only took one contract on it because of this. But the reason why I took it is if you look at this hourly time frame on MNQ, we have, I almost want to say like two ranges within the range, right? We have this big range here, right? This is the range. But then we kind of have like this zone in here that you see us in there. And then we have kind of like this lower range in here. So what I hope to demonstrate is that you see we're kind of within this range, break down, then we find some resistance in here. You know, break down, we're kind of chilling in here, break back up, we're back in this range, break down, find some resistance, we're in the bottom. So it's not ideal, it really isn't. But that was what I was looking at, is if you look across here, we have these long wicks here, here. We have some rejections when we get below it. We come over here once we get that move back up to the top of the range, and we start holding that same level right around like 19,077 or so. It's kind of really what I was looking at. And when we were pushing up, we push up, we show a little bit of weakness. We have this really strong rally from the bottom right. We show a little bit of weakness. And we're starting to see some smaller candles. We're starting to see some longer upper wicks. And this is where I entered. So after we had some what looked to be confirmation that there was weakness here, I entered on this candle. We had a big spike in volume. We had a bearish engulfing. We had a long upper wick. Everything was looking pretty good. I entered somewhere around 64, I think, right up in here. Essentially my risk tolerance was up to like 77, 78 up in here. Reason being, if we're looking at this hourly chart again, that 77, 78 is kind of the bottom of this range that we see in here. So I entered a little early. Ideally, probably the better entry would have been like that 77, 78. And you can see what happened the first time we touched that like 77, 78 level right here. We wicked up, touched it, and came immediately back down. That was short-lived though. So looking at this, you should probably be able to tell that I got stopped out. I got stopped out on this move up. I was trying to be patient. Like I said, I only took a single contract because it was a little bit riskier of a move. My target was back down. I think I had this target like 38 right here, where we'd kind of bounced before, was my target. So from 64 to 38, that's what, 26 points if I'm doing quick math. 26 point take profit. My stop loss was, I stopped out around, I think 80, somewhere up in here when we broke above this wick. So what did I say, 65, 64? All right, so we got like 15, 16 point stop, so 15, 16 points of risk for 24 points of reward. So a little over 1-to-1. Obviously, that's not super ideal either, right? Had I waited to enter around that like 78 level where I was really confident, had I waited to up here, then, you know, if we broke out above that, I could have had about 10 points of risk targeting, you know, even just like this level down here would have been about a 30-point move. So that would have been a better entry for me. Nonetheless, it was taking a trade in the middle of a range, and that's not necessarily what I'm looking to do. So I will say that overall, I'll give this trade maybe a C, right? Maybe a C, C+. It wasn't terrible, but it wasn't great. I did have some confirmation, or what looked to be confirmation, that we were showing some weakness in here. Also looking previously at like the pre-market, right, we had some rejections in this area. So when we were looking like we had some weakness in this area, I was just looking for that quick, like, you know, 20, 30 point scalp to the downside. That's that. That was the first trade of the day. Stop loss was a little wider, taking a trade in the middle of a range. My entry wasn't incredible. I think the best thing that I did was only take one contract, knowing that this wasn't necessarily like the most A+ setup ever. So started the day down. I was down, what, I had like 15 point, I was down like $35. So maybe like 17 point loss. So that's where we're at. We got a really, really strong move. And as I was saying, when you're in a range, right, I want to look at trades at the top and the bottom of the range. So once we got up in here at the top of this range, we were looking really strong. But I was looking, we had yesterday's high a day, and then we had kind of this all-time high right up in here. And then previously we rejected off this area as well. So once we got up in here, this is now kind of fitting my criteria of what I want, right? I want to see us show some weakness up here. And I took a trade on this candle here, I took another short position. Why? Because we're at the top of the range. That's where we've been rejecting. I expect it to happen again. Don't want to just jump in blind though. You want to have some confirmation, so we'll talk about that confirmation. But additionally, we had this whole move up with no real pullback, right? There's some red candles, but I wouldn't even count this as a pullback because it was pretty much continuously making new highs. Even on these red candles, we'd push up, make a new high, sell off a little bit, push up, sell off, push right back. So no real pullback. We pretty much went vertical from the bottom of the range to the top of the range. The reason why I took a short position here, and if I look at this lower time frame, it will show why. Oh, I don't want to do that. All right, so here we are, right? Is this the right area? Yes, it is. So if we're looking here, what do I see? I see that we have this strength moving up, right? And then we get a little bit of a pullback, and we formed a hammer here, so I was a little hesitant. But then this next candle here on the 5,000 tick chart, this like hanging man or whatever it's called, I think it's called a hanging man, where you have that long upper wick. It's essentially the exact reversed of a hammer, right? You have a small candle body at the bottom, long upper wick. It's pretty much if you took a hammer and flipped it, inverted it. So that also coincided with this price action in here, right? You see volume really dying off, and you see weakness, longer upper wicks, small candle bodies, kind of inability to break higher. So I entered once we broke and retested this area right here. So this is the most recent low, and then you also have it with that hammer on the 5,000 tick chart up in here. We broke down and then we pushed up to retest this area. I took one position right here. Where was my target? My target was down at the bottom of this range. We started to move down. We started to push back up. Once we got back up to my entry, I actually added another contract. Reason being is that we got that clean break on the 5,000 tick chart, right? We got that clean break. We had that lower, that swing low. We broke right through it. Looked pretty bearish engulfing. Then we come up and retest it, right? That's an excellent entry. So that would have been a great entry had I not entered in here. So that's why I entered a second position, because it wasn't going to affect my fill price. It was right where I had already gotten filled. So essentially it just gave me an opportunity to size up in that same position. Excuse me, I apologize. I filled on this candle here. That is, no. Oh man, I'm stupid. I did get filled here. Talk about it. I got confused. I apologize. We're back. I got filled here. All right. When we started to move down, I took a quick scalp. It was like maybe eight points or so. I just took a quick scalp because I had two contracts. I wanted to take one off, lock in a little profit, and then just leave a trailing stop on my remaining contract. I initially had my take profit here, but once we had these three consecutive candles here, we were looking pretty bearish all the way down. And so I actually decided that I was going to let this run. I thought, maybe we get a bigger pullback. So I moved my take profit to down here, which would have been, about like a 25 point profit. I entered around like 125 up in here, moved it down here, and set a trailing stop. We just about hit it. We got pretty close here. We were, about 4.5 points off my take profit, and then we pushed up and hit my stop loss. I was moving my stop loss down as we were moving down. I had it kind of right at the top of this candle. We came up and wicked me out, and then got that continuation down. So that was a little bit of a bummer. I left some money on the trade. I even got a little greedy and moved my take profit because it was originally here, and that would have just hit. And that would have been pretty decent. That would have been nearly a 20-point move on that one contract. So this got me back. I was down $7 overall at the end of the day. So this trade was decent. Probably moved that stop loss down a little bit premature. As you see, we did get that move down that would have filled me. Nonetheless, was happy to make back some of that money off that initial loss. How can I trade better? Well, I could have entered a little higher on this trade. I could have had a little less risk, but I was a little nervous because we had this hammer. So until we broke that swing low, I wasn't really too interested, especially with the strength that we showed and the fact that I got burnt. My first trade, I should have I probably shouldn't have taken it realistically, because it was in the middle of a range, and I don't want to take that generally. So overall today, I made some mistakes, right? I didn't trade my best, but it worked out, right? It worked out. We took a little bit of a riskier trade. We kept the size small to account for that. We took a bigger loss than we probably should have. But that's all right, because we got one decent trade in here, and it wasn't even great. We got a decent trade. Had I not been greedy, had I kept my take profit right here, if I had both my contracts take profit right here rather than trimming one early and leaving the other to run, I could have been positive on the day overall. But it's a continuing learning process, right? I'm not perfect. I'm not going to be perfect every single day. I'm not going to be green every single day. The best that I can do is manage my losses and try to win more than I lose, and try to have my winning amounts larger than my losing amounts. So today we didn't quite get that right. We are still a little bit red on the day. My win, like I said, I got a little greedy. If I just took my profit initially where it was supposed to be, I would have been positive on the day by a few dollars. I don't really care. You know, whether I'm down $7 or up $5, it doesn't really make a huge difference to me. But over the long run, I definitely want to be profitable. And that means to reduce the amount of losing days and increase the amount of wins, have bigger wins than losses, etc. So it wasn't the best day for me. It was a little bit tricky, but that's that. I do want to talk about the one trade that I did not take. It happened later in the day. I mentioned it earlier in the video, but I want to go over it because I think it's valuable, and it was a banger. So yes, same thing, right? When you're in a range, you're looking at the bottom of the range for a long position. Top of the range, you're looking for a short position. What you're assuming is that we're going to maintain this range that we're in, and you're just looking for it essentially to like revert to the mean, right? If you drew like the average price of the past couple days, it'd be somewhere right in the middle of the range, right? So you want to assume that we're going to revert to that point. I was watching this. When we broke down this morning, we were looking weak on ES, and we started to bounce. We have this clear level here around like 53, 51, we'll call it, where we have some bounces, right? Bounces in here, bounces in here. Break below it, we have some resistance, rejections in here. Break back above it, we have some bounces in here. Break below it, break back above it, and you can see what happened. We break, we retest, and we get continuation. So that's what I was looking for. It didn't really happen when I was watching the market, but see this strong break? What I wanted was this right here, this pullback and retest. It's absolutely perfect. It's beautiful. You can see previously we bounced in here, previously we bounced in here, previously bounced in here. Same thing here, right? Broke, pulled back into this area, got continuation, bounced in here from here, bounced, you know, broke, retest, continuation. It's happened like 6 times in this zone in the past week. So this is what I was looking for. It happened around 10. I got off around 9, so about an hour after I got off. But that was kind of the one trade that I was watching, aside from that rejection that I took at the top on NQ. Once we got back into this range and broke above and showed some strength, I wanted to see this pullback. Like I said, didn't quite happen while I was watching, but that's an excellent trade. That's something that I would want to watch, especially when you're in this range, right? And I said I want to avoid the middle of the range. I still consider this fine, right? Because if you look, like, this is still near the bottom of the range, and it's obviously a big level. So when you get that break and that retest, that's all, you know, all go ahead. And even if you just took a swing high, that's like a 10-point move. So not too shabby at all. Really minimal risk. You know, if you got in somewhere around here, the lowest it went was not even 2 points. So you could risk 2 points for a potential 10-point. That's a great trade. That's something that I wish I would, you know, maybe happen during the time that I was on. But nonetheless, didn't hit it. That was something I was kind of waiting for. But it happened a little later in the day. That's all I got for you. Thank you for watching. I appreciate it. I do trade live Monday through Friday, so I'll be here all week. I hope you have a great rest of your day. Thank you for watching. Peace out.